So let's try and understand what happened in the recent collapse in the banks first. We had three banks, SVB, Signature, First Republic Bank, that recently closed. Most recently, PacWest as well is the latest bank that is also potentially going to be absorbed by a larger institution. You have to understand that a lot of these regional banks are very focused and very niche. A lot of their businesses is towards a startup in terms of the monies that they invest in or they loan to or VC capital. It's not so much in terms of a larger banking financial services collapse. It's more towards the confidence level in terms of how depositors are worried about the banking financial services industry. So I do think that now it's controlled. It's likely, I can imagine some of the other regional banks, maybe the next in line collapse. The concern, of course, is whether there's going to be a domino effect. If you think about the banks in terms of how they collapse, it's actually the credit tightening, and that has a repercussion in terms of business not able to invest more, people in terms of their share prices, in terms of their retirement funds. The stock market has been quite depressed of late. There's a whole effect in terms of people not purchasing more, businesses not able to hire more headcount in terms of the credit tightening, and then that rolls out to potentially the rest of the world. And then people need to understand the US is still the largest economy in the world, and that could potentially affect how a lot of the US companies consider headcounts in the other parts of the world, including Asia. There's a few of the Western organizations have been a lot more prudent in terms of hiring in Asia as well as in Singapore, and I do foresee that prudency continuing in the next couple of quarters. While the general economy globally has softened in the last probably, I say, 2.5 quarters, there will be opportunities, especially among Asian companies actually. Asian banks actually benefited from inflows of depositors into some of the local banks, as well as some of the other strong Asian institutions. Companies themselves in Asia are also where we see a lot of interest in terms of headcount are usually from Asian companies. China, of course, is still a very big driver. China just woke up after relaxing their COVID restrictions. So we see quite a bit of interest in terms of Chinese companies expanding overseas, and most of them are actually looking towards Southeast Asia actually, as well as of course Hong Kong, in terms of where they can be looking to increase headcounts. So the ripple effect, you have to remember, when there's a tightening of credit, it affects all industries. So when it's harder for them to borrow from the financial institutions, it's also then more difficult for them to invest in other business or other locations. So that has a repercussion in terms of where headcounts are going to be. It's difficult to know, of course, whether your organization is going to be cutting headcount, of course. I say this for people currently that have a job. Do your job well, put in the effort, but of course, be very mindful. If you are working in an industry or a sector that have been in a bit of a doldrums in the last couple of quarters, then perhaps what you might want to consider is to see whether there are other industries that are related industries that can be a plan B or plan C for yourself. The areas I do see for candidates to consider is really, I say, is Asian companies. Asia is where the majority of the business are. And that's why I do believe that if you're going to be considering alternative jobs, think of the Asian companies as a good backup. Another thing that you want to, of course, do is stay engaged. Mingle with people in the industry, with recruiters, find out what's happening in the market, and know which are the kind of firms or sectors are hiring. At least you can quickly move on should that unfortunate incident happen.